Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. But maybe for today's purposes, it might be the second best investment show. I'll tell you why a little later on. This show is designed to help us grow our money. You see, the challenge is we take our precious time, we go to work for a paycheck in order to eat. We take our time, we go to work so that we can get a check to provide. And going to work is not a bad thing, but imagine a life where money could make you money, so you had a little more time for the things that mattered most to you, spending it with family, friends, engaging in a purpose greater than yourself. That's what Everyday Investor Show is all about. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the ROI? What is the return on investment? 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, what is the downside? Is there any risk whatsoever? There's always something, but if you have the knowledge, you can mitigate that. I am super excited about today's show. We have one of my favorite guests here. We're going to be talking to, wait for it, we'll be right back. On today's episode, we talk to my dear friend Carmen about how we can make money investing in a real estate investment trust.
So yes, Rav, that's exactly why we launched a REIT. We had so many people that wanted to get invested in multi-residential commercial properties. And we said, geez, you know what? I can't acquire this many properties. How do we do it and include all of our investors?
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to Carmen about how we can make money investing in REITs, let's talk to Omar and find out what's going on in the world of stocks. Over to you, Omar.
Thanks, Rav. Omar Khan here, guys, with Data Trading Weekly Market Update. Just want to let you know what's going on. The markets are in a bit of a holding pattern right now. Why? Because no one really knows how the vaccine is going to roll out, or how it's going to continue to roll out, or if it's going to be a further lockdown because of these variants. So the markets don't like uncertainty, and they look forward. Markets value today what the earnings of these companies are expected to be at in 12 months from now. So because of all this uncertainty, the markets are kind of doing a bit of nothing. Going up one day, going down one day, going up one day, going down one day. Expect this to continue until earnings season starts later on this month. And then the corporate earnings and the forecasts of these CEOs will dictate where the stock market heads in the future. We're pretty optimistic here. We think the rollout's going to go well, along with all the stimulus measures are going to cause a lot of upward momentum in the economy and thus corporate earnings and thus the stock market. But let's see what happens. Anyways, back over to you, Rav, and we'll see you guys next week.
Thank you, Omar. We'll be talking to you next week. Carmen, thank you so much for being on the show with me.
Oh, thank you for having me. I miss it so much.
Yes. Well, I mean, you're busy. I mean, I'm looking at the set that you're sitting in, and I say set because you're now in your 4th season of 30 Minutes to Wealth, and a phenomenal show. And that's why I say maybe Everyday Investor is the second best show. I love watching you and Jordan, and you're really, I mean, you know this, I don't need to tell you because of all the raving fans and emails and calls that you get, but are you still having fun? I mean, I've been doing it for 17 years and there's times where it gets tiring, but when I have guests like you, I really have fun. How about you? Now that you've 4 seasons in, are you really enjoying it?
I love it. I love it. If I could do that just full time and also the real estate, it'd be awesome. It'd be amazing. It's great because I love to share knowledge and expertise with people. And then what the best part of it is when you hear from people and they say, oh my gosh, we watch, we listen, we learn, and it's so inspiring. And you're doing things and changing lives. It's amazing. I love it.
And you know what I love, Carm, about you? I mean, I don't have enough time on the show to tell you all the things I love about you, but
Oh,
what I really love about you is you are an active investor. And I think that's what makes 30 Minutes to Wealth so good, is that you're an active investor. And so then therefore you can teach people like real time.
yeah. Yeah, I'm in it on both sides, on the financing and then actively in it and passively. But I love real estate so much that, I'm always looking into new things and looking for new challenges.
So yeah, Carm, so you're investing passively, mostly aggressively, actively. It's your hobby. I know you love it. But then there's many people that say, when I say many, hundreds, thousands, that say, I want to invest with Carmen. And then this was the impetus for your REIT, correct?
So yes, Rav, that's exactly why we launched a REIT. We had so many people that wanted to get invested in multi-residential commercial properties. And we said, geez, you know what? I can't acquire this many properties. How do we do it and include all of our investors, our work family? And that's when we launched District Property Trust.
District Property Trust, that's what it's called.
Yeah, yeah. So it's a mutual fund trust. So investors, when they invest in it, they invest with us. So we're the general partner. We manage the day-to-day operations. I am very active on the operations as well with respect to the buildings and the properties that we have. I'm determined to get the rents increased, make things change with values, because at the end of the day, on income producing properties, your income is what creates your value. So every dollar that we get to increase our rents and every cost that we bring down brings our value up. And that's the mandate. That's what we want to do. So it's really exciting. I love real estate, obviously, and I can't wait to get into buying many, many more and allowing for our investors to benefit with us on this whole thing.
Yeah, and basically what you're saying, I mean, it's a great point that, you look at the most undermanaged, dilapidated, nobody wants type properties, because that's where you, and you've always done this is where you see the upside. Hey, if we manage it right, if we put a little bit of lipstick in it, sometimes even more than lipstick, now you can increase the rent, which increases the operating income. And then when you divide that by the capitalization rate, you've just increased the value of that property, significantly. So I think that's
my expertise. That's what I like to do. And what we do is, but we don't just put lipstick on our properties. We like to make them exceptional. So we happen to have one right now in our portfolio. It's in London, Ontario. It's a great asset. I think it's like 35 or 36 units. It's in a very nice area, but it really needs help. And we're going in there to completely renovate it. But when we are done, we are going to probably double our value on that property. And our investors get to benefit from it because they actually own that property as well. They're a part owner. So they buy units in our REIT. And as the acquisitions continue and as we grow, so does their investment. They're actually partners with us.
So this is because you've had deals before, where you've said, okay, Rav, here's a specific property. Do you want to do this with me? And then I do that deal with you specifically. But with District Reit, this is putting money into the trust. And I have ownership of all the properties. I have a piece of all the properties that's in that REIT. Is that right?
Right. That's right. And, even in really difficult times, real estate has shown its true colors really through times that we're going through currently. And it's probably the best market to be in. Well, that's my perspective because I love this business. Don't ask a stockbroker that question. But, I think it is a very, very safe environment from the perspective of people needing a place to be. And if God forbid something really bad happens, they go to rentals. They go to these types of properties. So it's really interesting. And with District, we don't only look for the properties that are challenged because they're so hard to find. Everybody is migrating to real estate, purchasing real estate. Like, good luck finding anything in this market. It's insane. So what we do is, because we are a builder, we have a building arm and we have a development arm, we actually acquire land that we can redevelop and build the perfect product for the REIT. And it's very exciting. There's all kinds of interesting programs, affordable housing, excellent financing with that. So all of that stuff is what we want to bring into District. And then all of us benefit from it. So it's not necessarily just old, dilapidated buildings. It's stuff that we build brand new, which is even better.
Okay, no, Carmen, I love this. And so RAV invests in District REIT. Is there a minimum that we're taking?
Yeah, so I think our minimum investment there is 10,000. So it's a small investment amount. It's not astronomical, so it's affordable to a lot of different people. But what I do want to mention is our REIT. So it's a private REIT. It's not a public REIT. So private is where the money is made. We're not dictated by the markets, the stock markets and things like that. We're dictated by the real values in the industry. And so that's a really good thing for REITs. As well, we are diversified. So diversified meaning we can do mortgage investments, we can do industrial, storage, commercial, whatever we think we can best increase value and create value in real estate. And so this is a great thing also, because the REIT is diversified in many ways. Like, for example, if we didn't have the opportunity to build, we would have to go out today and look for property, and you can't find real estate today that cash flows. You're buying now, people are buying properties at a 3% cap rate. And there's no cash flow left there. So how does any REIT distribute cash flow to their investors on a monthly basis if the properties aren't making any cash flow? So we have a mortgage arm to this. So we can lend the money into mortgage investments, increase the return and the yield, and that's what we're experts in. So we have a lot of that available, and therefore we can distribute really nice returns to our investors.
No, I love it. What is it, just cash, or can we use my RSPs as well?
You can use registered funds, TFSA, cash, whatever you like. It's also Canada-wide now. So anybody in Canada can invest in our REIT.
And I know you're going to bring a colleague on just in a few minutes when we come back from break, but what are projected returns in terms of cash flow? I mean, I know what I love about REITs, Carmen, and you've taught me this as well, is and you've mentioned on the show, it also increases in value. These guys are paying down our mortgage. But in terms of the cash flow, projected annualized is what?
Well, historically now, we've been distributing 8%
Okay.
annually on a monthly basis.
8% cash flow. And I get that. So if I put in $100,000, I'm going to receive $8,000, and you're gonna pay me out $700 almost every single month. So it brings me in.
You don't want to hear something interesting about that money that you're getting every month? It is considered a capital gain, and also it's tax advantaged. So the component that is not income. So I don't want to complicate it too much for people, but a portion of the investment is going to be income generated, and a portion of it is considered cash flow from the rental property. So the portion that's rental property income is tax deferred. So a good chunk of that 8% that people are getting is tax deferred. So you're not paying currently any taxes on that amount, and it's taken at the back end when you sell your units.
So there's great tax advantage. And when I sell, but I don't have to sell. I mean, I could leave this long term. It's not like there's an exit for District Reit. You're continuing to acquire properties, diversified. putting them in there, and I could have this for 10 years, 20 years, and then whenever I want to exit, I can do that. Now, what happens if I don't want to? You know what, I'm gonna ask the question, we'll answer it when we come back. I was gonna say,
Okay.
what happens if I don't need the cash flow? Can I, just keep it within within the REIT? But let's take a quick break. We're talking to my good friend, Carmen Campagnaro. She's teaching us how we can make money investing in a real estate investment trust. Don't go anywhere, we'll be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rob. Welcome back to Everyday Investor. Before we continue with my good friend Carmen, learning how we can make money investing in REITs, let's find out what's happening in the world of mortgages. Over to you, Kyle.
Thanks, Rav. This week, I want to talk about the difference between putting 5% down now and saving to get to 20%. There's pros and cons to each. With 5% down, you get into the market now and get to take advantage of principal recapture and potential appreciation. Saving 20% down first gets you potentially a lower mortgage payment because you're borrowing less, as well as no CMHC or insurer premium. This could be $10,000 to $20,000 depending on the loan amount. Which one is best for you? I live by the philosophy of don't wait to buy real estate and wait. I like the idea of putting 5% down better to get you into the market now, take advantage of principal recapture and that appreciation. I've had many clients who have been saving for the 20% down, and by the time they got to the 20% goal, housing prices were $100,000 to $200,000 higher than when they originally started looking. Would have been cheaper to pay that premium. As always, any questions, I'm here to help out. Thanks, and back to you, Rav.
All right, Kyle, thanks so much. We'll talk to you next week. Carmen, before break, I was asking you if I didn't want cash flow, could I kind of roll it in? And then all of a sudden, if you're not beautiful enough, you brought in your friend here with the nice big smile. You must have. What's your name? And what did you take the liquid paper and do each tooth? Whatever you're using.
You got really white teeth, right?
Whatever you're using, I need it.
All right. Well, I appreciate it, Rav. My name is Shoaib Gaya. I'm basically one of the senior associates working for District Reit. I've been in the industry for 6+ years now. And about a year ago, I had the pleasure of meeting Carmen, who presented me with the opportunity to take over the capital raising and the management, the investor relations of District Reit. Mm-hmm. So that's where I came in.
Yeah, no, it's great. And one of the things people don't know, because, Carmen is very hands-on, very active, just because she's passionate about it. But Carmen, it's not just Shoaib and a few guys that are running everything behind the scenes. You've got what? 50, 60, 70, 80, like how many people are sitting in Burlington there with you?
About 75 right now.
75.
But our company, it's a group of companies, Rav. We have ProFunds Mortgages, which is the original company that I started 25+ years ago. And then we have Valor Group, which Valor is a developer. And then Valor launched a couple of products like our Hyatt, which is a high yield opportunity trust. So it's another form of district, only it's specifically private lending. And then Valor has the construction arm and the development arm. So it's quite an interesting, it's really an awesome.
And now this District Reit, which again, I can get involved and I can own real estate across the country. And if this apartment building is doing okay, this one over here on the other side of the country is doing phenomenal. And so that's where you guys are saying that I can just on cash flow make my 8%, but in terms of appreciation and paying down mortgage, I think your kind of projected returns are in and around the 13-14%. Is that right?
That's exactly right. So we have that 8% targeted annual return, and that's coupled with the 3 to 5% capital appreciation. So that will be seen from us paying down the mortgages and the value of our properties gaining year after year and going up. So we're very happy actually with the capital appreciation component because we actually just saw a 6% increase in our unit price, which is
huge.
Yeah, it's fantastic news for the
Yes.
REIT. And that unit price jumped up from $10 to $10.60, which we saw from the capital appreciation side.
So just to put this in perspective, Rav, if you had units in the REIT, you bought them at 10, you're getting paid your distributions monthly of 8% a year. Now your unit price just went up by 6%. So that's a pretty huge lift for a lot of people that have invested already.
Well, especially when it's RAV style and I'm just writing a check.
Yeah, well, that's exactly what they are doing.
That's right.
These investors that have invested with us, they're making money while they sleep. Yeah, so the unit price now is $10.60.
Yes, it is.
And
let's say Carmen, I'm not quitting my day job anytime soon. The cash flow is nice. I go do some things with that. But is there a way to roll it back in if I don't want to take it?
Yeah, definitely. So we have something called a drip option, which allows you to essentially roll back your cash flow, that monthly cash flow, and put it back into the REIT. And we would additionally buy more and more units for you every month. So not only can you do a cash portion from the monthly distributions, you can also do a drip if you like.
so drip, it's basically compounding, right? So your returns are purchasing more units. So it's just compounding as you go. So it just keeps growing, which is amazing.
So give me some examples. I mean, you just talked about the one in London, it's 30, 40 units. What other product is in the REIT, and what do you want to put in that REIT as well? I mean, I'm really excited about you're building from scratch, like you're actually building product to put in. Is that what you said?
Yeah, so right now the next acquisition in sight is a 47-unit townhouse complex that we actually built. It's brand new, it's beautiful. It's called Wonderland Path, fully leased, and I'm talking rents that are far greater than we thought we'd ever achieve. So the REIT will be acquiring that in this year. And we also have just finished building 3 apartment buildings in Ontario, in the west of Toronto area. They're each 33-unit buildings. So we're looking at having those also join our REIT. Now, everything we do, I'm involved in the acquisitions and things, and I am invested in the REIT myself personally, but we do have a board of directors that make decisions united on any acquisition. So it all has to make sense for the REIT. We're not purchasing things that are overly inflated in value. Appraisals are done. So people think, okay, is there a conflict here? No, because we're very particular about that. And the board makes decisions on any acquisition we do. Sometimes it just doesn't work. It's unfortunately, I had a couple of buildings that we did, and it just didn't make sense for the REIT. So we couldn't do it. And that's okay. We sold it, or I kept it, or something like that. So I just wanted to make that clear. So there is a process.
Yeah, so what you're saying is, I mean, that doesn't affect RAV because RAV's part of District Reit or invested in. You have this on the side, and what you're saying is if it doesn't make sense for this product to go in the REIT,
That's right.
then you're not going to put it in. But that doesn't affect RAV as the investor because it never came in the first place.
Oh, no, it doesn't. I just, not everything is approved to be going into the REIT.
I'm not going to take.
There's a lot of research.
I'm not going to take, Shoaib's principal residence and put it in the REIT.
No.
No, please don't do that.
So Shoaib, talk a little bit about, we live in a great country. We're protected, but at times it's hard for the everyday person to get into investments because this is regulated quite heavily, right? I mean, so talk a little bit about regulations, just a little bit, because a lot of people qualify for something like this, but they don't even know it. So I don't want to, scare anybody, but this does fall under securities.
Right. So it is a private security investment. So we do have exempt market dealers that we work with that you have to go through so that they can determine your suitability assessment. They'll determine what investor type you are. And what that means is essentially you'll be labeled as whether you're a eligible investor or accredited investor, which will determine the safety of you as an investor investing in a private space. So how much you can actually invest in this private investment.
Yeah.
Yeah, we
Carmen,
don't participate on that. So we speak to investors about our product, and Shoaib does a great job at that with his team. And when someone is interested to proceed, then they can speak to the people we work with.
Yeah, you have a third party that you know makes sure that RAV's qualified to be able to get into into this vehicle, and that's because there are people out there that have gold mine trust, and they're taking grandma's money and have no idea what they're doing, and so therefore we do have to protect grandma. But then there's other no-brainers where I want to invest in this REIT and I love the portfolio, but just to make sure, because not everybody knows, as pretty as both of you are, not everybody knows you and knows what you're doing. And I don't mean pretty. I do mean pretty, but I mean trustworthy. As trustworthy as you are, we still have to go through the same, regulations and due diligence. And I know you're audited all the time, Carmen, and that's a good thing.
It's the nature of the business,
right?
right?
Yeah. So
I think that's perfectly where an investor actually falls into the REIT, is because if you're not trying to be a landlord yourself, you have your day job, working 9 to 5, you're not trying to be a landlord. That's where you come into the REIT and you're collecting that passive income, right? You're not dealing with the audits. You're not dealing with being a landlord and dealing with tenant complaints and whatnot. So that's where we come in and we do that for you. And you just sit there and you collect that monthly cash distribution.
Yeah, no, it's great. So the ROI is, you said 8 to, maybe 14%. Well, not 8, it's more than that, but up to maybe even 14% when we're looking at, all of it. When we're looking at all of it, so that's what I can invest with cash TFSA. I can get in with a minimum of $10,000. How does I get distributions monthly? How does the overall exit work? Like, obviously I can't put in $10,000 and then next week take out my $10,000. Like, we've got about a minute left, but maybe you can talk to that, Shoaib, about how do I exit if I'm moving on.
Yeah, definitely. So it's an open-ended product. So investors can come in, we have a closing every month, but they can also leave whenever they choose to. We do have certain penalties that are in place within the first 6-month period of investing. However, after that, there's no redemption fee or penalty at that point. So if you did decide to redeem, you just let us know. We fill out the redemption forms, and there's a 30-day notice that we require, 30 to 60 days notice that we require. But after that, you're welcome to redeem your funds at any.
No, I mean, I only ask because things can happen, but of course you have to do that because you're using, you guys have lots of fees and you're using the third party EMD and so on and so forth. So you want to make sure that it's not like an in and out kind of game. This is not a stock. You're investing in real estate. And no, guys, I love it. Carmen, we've got to go. Any closing thoughts that you can give me?
Give you closing thoughts on this. I think people should invest in real estate. That's my thing. I can say that over and over again. And don't let fear cripple you. You have to take that leap and do it.
Yeah.
And whether it's a REIT or whether it's a mortgage investment or whether it's actively out there, I think it's a very viable place to be.
Amazing. Shoaib, nice to meet you virtually. And Carmen, thanks so much for doing this with me. Can't wait to see you in person.
I know.
Miss you like crazy, but thanks guys for being on the show.
Bye now.
Absolutely. And thank you guys for watching. Without you, we would not have a show. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.